The RSI indicator. If you've been in trading for a while, then you must have heard about the RSI indicator. And what you've heard about RSI indicator is most likely to be a misconception. Have you heard that you buy at the oversold RSI condition and sell at the overbought RSI condition? Yep, I heard that too. And when I tried that, I lost more and more trades. So I came up with 3 different strategies that I have backtested, validated in the historical data, and found them to be profitable. So in this video, you're going to learn why selling at overbought RSI condition and buying at oversold RSI condition is not true. And you're going to also learn about the 3 different strategies that I have validated and backtested and proven profitable in the historical data. The third one, I'm going to backtest these same strategies with you in this video to give you the confidence that what I'm telling you is true. And guys, this video should not be free. These strategies are worth hundreds of dollars, and I'm doing it free of charge so that I achieve the goal of making 100 traders profitable in 2020. And second, I'm also doing this for free to say thank you to my first 24 subscribers and to those new subscribers that are going to subscribe based on this video. If that sounds interesting and you want to be part of the profitable traders, then hit the subscribe button and the notifications bell so that you do not miss such valuable contents like this in the future coming up. RSI values range from 0 to 100, and it has upper band which is at 70. You can reset it to any number you want, but the standard one which is being commonly used is 70, and the lower band is at 30. So when the RSI reaches this upper band, then it is an oversold condition, and when the RSI touches or crosses this lower band, then it is an oversold condition. And let's say that we sell at overbought condition and see whether this misconception is true or not. So we have this condition here. This condition, the RSI is in overbought condition right away from here. So if you are to sell when the RSI is in overbought condition, then what happens here? You put your sale here, market reverses, then you wait again oversold here, or overbought here rather, then again overbought here. What happens here? Continue to the upside, overbought here, continue to the upside until it reaches here. So you'd have lost massive amount of money here if you just trade based on this one here. And there are multiple examples that I can show you here, but that's just to show you that overbought and oversold conditions are not as effective as combining them with other factors of the market. And I have come up with a strategy that I call the 50-50 Rule RSI Strategy. In this strategy, I have 5 rules that I follow. The first rule is that set the RSI indicator to 50 period and draw a horizontal line at 50 of the RSI value. What I mean by that is this is your RSI. The platform that I use is TradingView, and in TradingView you can go to indicators. My favorite indicators are here: the ATR, the moving average exponential, and the RSI relative strength index. Relative strength index basically show the momentum of the market. So what I do here with the first rule is to change the RSI input length here. By default it comes at 14, but what I do, I change it to 50. Then another thing I do here, since these values range from 0 to 100, I put a horizontal line at 50 RSI value. The rule number 2 is that when the RSI oscillator, the line graph, is above 50 horizontal line, then I'm looking for buy conditions. And when this oscillator, the RSI oscillator, is below this horizontal line at 50 value of RSI, I'm looking for sale opportunities. Step number 3 is that you wait for the pullback and trade at the pullback, but the pullback should be at least 3 candles or more. There should be a massive pullback before you trade, before you enter the market. So let's say the market is in an uptrend, going up, then pulls back here, then goes up here. So this pullback should be at least 3 candles or more. So this is the third rule here. The fourth rule is to look for the confirmation, and the confirmation could be an entry reason like the price action pattern. For this example, what I'm going to use is the engulfing candle, bearish engulfing candle or bullish engulfing candle. But these are the examples of the engulfing candles that I'm talking about. So for this example and for this strategy, let's keep it simple and let's use bullish engulfing candle or bearish engulfing candle as our confirmation or entry in rule number 4 for the 50-50 RSI, for the 50-50 rule RSI strategy. And to know more about the candlestick patterns, I have a video that explains more about the candlestick patterns. I'll put the link of that video in the description. Step number 5 is your stop loss and take profits. What I do here is 1 ATR above the swing high or swing low of a candle as my stop loss, and the ATR indicator is here. So what I do, I just bring my cursor on the candle and see the value of that ATR. Then I put 1 ATR above the swing high or swing low of that candle as my stop loss. And the take profits, I use multiple reasons for my take profits, the previous structure, or I use 1-to-1 risk to reward. You can use anything as your take profit based on your backtesting results as well. So these are the 5 rules that I use for this 50-50 rule RSI strategy. Let's dive in and explain more about this. So guys, to make this work easier, I'm not going to leave my all back testing results. I'm going to leave it here so that I make this video as short as possible. So what you do here is look at this RSI and look at the horizontal line at 50 here. So what happens when this RSI is below this 50 here, which is the rule number 1, then you look for the sale opportunities. And rule number 2, you wait for the pullback, at least 3 candles. If it is a downtrend with a pullback going to the upside, wait for at least 3 green candles as a pullback. Then your entry reason or the confirmation should be a bearish engulfing candle, because we are in a downtrend, because this RSI is below the horizontal line. Why was this one a trade? Because it was pulling back while the RSI is below this horizontal line at 50, and I saw this, and there is this nice bearish engulfing candle as the confirmation. So your stop loss would be 1 ATR above this swing high. And to know whether it is, to know the ATR value, you just put your cursor on this candle here and you see the value of the ATR which is here. So we have 17 pips. So you bring it here above here and see which is the level with 17 pips here. It's about up here. This your 17 pips. So I would put my stop loss around that area. I might take profit. I can take profit at this previous swing. I can put my take profit at the previous structure, or I can use one-to-one risk to reward, or I can use anything that I've tested to be profitable. So in this case here, the market came down, went up, came down here, and went up close to hitting our stop loss. And what happened here? Boom, it's a win. So this is our first win. I have represented with this green here. Let's see, is the RSI below this 50 horizontal line? Yup, it's below. So what do I need now is to wait for a pullback with at least 3 bullish candles. So I get this pullback here with at least 3 bullish candles here, and I got this bearish engulfing candle as my entry. So what happens here, you bring your cursor on this red candle here and see the value of the ATR there. It's about 16. So let's put the stop loss 1 ATR. So that's 16. It's here. This trade is a loss here. It's being stopped out here before it went to this direction. So I have represented it with a red with a red vertical line. So let's go ahead. Is the RSI below this horizontal line? Yes. So what we're looking for? We're looking for sale opportunities. So we're waiting for the pullback of at least 3 bullish candles, then a confirmation or entry reason of a bearish engulfing candle. So this is what we have here, bearish engulfing candle here. So what do? You bring your cursor on this candle, you see the ATR which is 17, then you go 1 ATR ahead and take profit around this area. And what happened here? It's a win. The next one is the RSI below this 50 horizontal line? Yes. What we're looking for? We're looking for sale opportunities. So now we're waiting for the pullback. Here we had a pullback here, but with only 2 green candles. So, and our rule is that we'll look for a pullback with at least 3 green candles. So we don't have a trade here, though we have this bearish engulfing candle. So we don't have a trade. So we're waiting for another pullback. We didn't find. Here is a trade here. We had this pullback of 3 bullish candles with an engulfing candle here, this bearish engulfing candle. So what you do is bring your cursor on this candle and see your ATR, put your stop loss at 1 ATR above the swing high, and your take profit could be 1 to 5 or 2, whatever your back testing results tells you. But for my case, I like to put it at the previous level of the structure, which is around here, or more than 1-to-1 risk reward, and this play out to be a winning trade. Let's go ahead. We're looking for at least 3 bullish candles as a pullback. We have 3 bullish candles here as a pullback, but here it's not an engulfing candle, so this is not a trade. Let's go ahead and look for another example. Another example is here. We have this market coming down here. The RSI is below this horizontal line, so we are looking for bearish opportunities, sale opportunities. Do we have at least 3 bullish pullback candles? Yup, we have around 4 of them. Do we have bearish engulfing candle? Yes, we have here. Then you go to 1 ATR ahead. and go to more than 1-to-1 risk to reward, and that was a win. Another example is here, but before I come here, let me tell you why this is not a trade. Because it pulled back, yes, the RSI is below the horizontal line here, and why it's not a trade is that the pullback is not having 3 bullish candles, and number 2, we don't have a bearish engulfing candle, so we don't take this trade here. The trade that we take is here because we have more than 3, at least 3 bullish candles as pullback. We have an engulfing candle here, the bearish engulfing candle, which is a confirmation that we use as rule number 4 of this strategy. You put your 1 ATR above stop loss here, and your take profit as more than 1-to-1 risk to reward. This one was a loss here. We have a pullback of more than 3 bullish candles here. We have this nice bearish engulfing candle. That is our entry reason. And if we place our trade here, we put our stop loss at 1 ATR here, would have been stopped out by this pullback before it reversed here. So this one here is a loss. Yeah, and it's okay. Every strategy has losses and it has wins. Another winning trade is here. We have a pullback of around 3 bullish candles with a bearish engulfing candle, and the RSI is below this horizontal line. You put your ATR, you put your stop loss 1 ATR above this swing high, and your take profit as more than 1-to-1 risk to reward. What happened? It's a winning trade. And guys, if I'm to go to each of these trades here, then this video is going to be so long. So what you do here, this is Aussie dollar. You go and backtest this same strategy, and also see the dates here and the time of each vertical lines here, so that you can track it and go and confirm yourself whether what I'm telling you is true or not. I'm not going to explain all these trades here, but with the examples that I've shown you, that should be enough for you to take this trade and you add it into your trading plan, and you demo trade it before you go live with this strategy. This is let me show you an example of a bullish bullish example here. Here we have now the RSI above the horizontal line here. So what do? We look for the buy opportunities, and when we look for buy opportunities, wait for the pullback of at least 3 bearish candles. Then you look for an engulfing candle, then 1 ATR below the swing low, and the take profit as more than 1-to-1 risk to reward. And this is what we find here. We have this trade here. This was above the RSI, above the horizontal line. We have this pullback of 3 red candles, and we have this engulfing candle, bullish engulfing candle. So that was a winning trade. And another example is here. We have more than 3 red candles pulled back with a bullish engulfing candle as our confirmation, and the trade plays out to be a winning trade. Stop loss 1 ATR below the swing lows, and take profit as more than 1-to-1 risk to reward, or at the previous level of structure. And guys, the video is getting long already, and I cannot go to each of these trades here. Guys, the results of this strategy since January of 2020 to July of 2020, we have around 21 trades, the total trades, and we have 16 wins and we have 5 losses. So our winning percentage is about 76%, but this is not the accurate value. You have to backtest at least 100+ trades for you to determine whether this strategy is profitable or not. But for this example, I've just done the backtesting from January this year 2020 to July 2020, and there are about 21 trades only. So your assignment is to go and backtest this strategy with a large number of data so that you come up with the accurate winning percentage rate. Guys, this is a trade I took on Friday. It's not based on this strategy because the RSI is above the horizontal line, but I'm going short here. Why is it so? When you go to a daily time frame, you'll find out that this is a level that has been tested multiple times. This is a previous level of structure being formed, and when you zoom, you find out that this level is being tested here as well as resistance before. And I'm pretty sure when you go up here further to left, you'll find it being tested as resistance multiple times. So this is a powerful level of structure that I have been looking at for the past few weeks, and I was waiting for this market to come up to this level here. Then I'll go for a counter trend trade. In this case here, the level the market came up here, got rejected, and when it got rejected, it was rejected with this nice engulfing candle, this nice bearish engulfing candle. But by the time this thing happened here, I wasn't at my computer, so I missed this trade. But what I did was to wait for this market to pull back to that same area at the same level where I should have taken the trade from the beginning, and went short here. My stop loss was about 1 ATR above the swing high, and my take profit is about nearly 1-to-1 risk to reward, because I took it at this level of structure here as my take profit. And I don't expect this to be a reversal. It could be a reversal, but for this case I'm just taking it as a small correction here to the downside before it continues to the upside. But if it continues to the upside here and closes above here, I'll be looking for buy opportunities. But if it comes here to the downside up to this level of structure, then I'll be looking for buy opportunities at this level of structure that has been tested multiple times. Guys, another trade that I took last week was dollar Canadian, and it's purely price action. Let me break the analysis down. Everything started in the daily time frame, and in this daily time frame here, I see that we're in a period of consolidation. This was a trade that I took last week that turned out to be a win, and I expected this market to go up here and go short, but what happened here, it tested the previous level of structure and came back down here to the same level of structure that has been tested here as support, and support here. So what I did here was to go to a 4-hour time frame, look for an entry reason, and the entry reason that I got here was an engulfing candle. This engulfing candle here, this bullish engulfing candle. I didn't get the trade exactly. My entry should have been here, but I was late and I got into the market at this point here. So I will update you on how this trade played out, whether it's a win or a loss. I have to update you to point out that I don't just pick winning trades here and do the analysis on them. Another trade that I took as well is the Aussie New Zealand. This is the Aussie New Zealand that I took. Same analysis, price action. I went to the daily time frame, and on the daily time frame here, what do you see? You see a market which is making lower lows and lower highs, lower lows and lower highs. So this is exactly a downtrend. This is an indication of a downtrend, and we have this level of structure that has been tested multiple times here. Here as support here, support here, slightly resistance here, and I don't know, here also as support and resistance here. So I pointed this level as a strong level of structure, that if this market breaks below it and pulls back to this same level here, I would see a pushback, a continuation of the trend here, and that's why I took this trade to the downside. The same entry reason, I used the bearish engulfing candle, and I don't know how this trade is going to play out next week. I will update you, but what I know is that when I take 100 trades based on the same strategy, I'm likely to get more than 60%. So this trade alone might turn out to be a loss, but considering 100 trades with the same strategy, I get 60% chance of winning. So I don't care whether I lose this trade or not. And these are the only trades that I took last week, and I'll update you how they played out when all of them are being filled. And guys, the video is so long, and the other two strategies that I wanted to share with you along with this strategy, the 50-50 rule RSI strategy, I will make another video, part 2 of this video, next week. But that's if I get around 20 likes on this video and about 10 comments telling me your thoughts on this strategy here. Then I'll go and make part 2. If you find this strategy so helpful to you and the content that I produce every week on this channel, then consider to subscribe and press that like button and the notifications bell so that you don't miss my future videos. Thank you for watching, guys, and see you next week.